And joining us now to discuss the crypto markets is Nick Mancini, research analyst at crypto sentiment analytics firm Trade the Chain. Welcome to the show, Nick. So folks predicted a short squeeze just prior to the weekend. They predicted it would boost the price of Bitcoin. Can you weigh in on why Bitcoin is taking off today in your own analysis?
Yeah, so what we are seeing in our global community of traders over at Trade the Chain is a very large reaction to a compilation of technicals and fundamentals over the past few weeks. The technicals were obviously, bounce at 30K, extremely oversold, triple bottom, tightening of the Bollinger Bands. There's a lot of things that we can point to. And then on the fundamental side, we had a large kind of catalyst putting Bitcoin in front of everyone's eyes and ears, meaning the B word conference. And a lot of people just really discussing these technicals that were happening. So we're seeing this move of exactly what you're talking about, a short squeeze, triple bottom, coupled with a fundamental market driver with three, large entities or people who command a lot of social media attention. And now price is reflecting based off of that short squeeze that you mentioned and a large, massive amount of retail attention focusing on Bitcoin now that the institutional crowd is done with their trade.
How sustainable is this rally? Are you seeing breaking 40 anytime soon?
Yeah, that's a great question. And I guess I'll get my crystal ball out a little bit for this one. But I do see 40K as being extremely plausible. Right now, I think it's just beginning to tip up into the 39K and above level. And I think coupled with this short squeeze that we previously had and the fact that sentiment is now at levels that we were seeing during the weekend when price was busting above, that 32K, 33K, 34 and beyond level. We're seeing sentiment increase. We're seeing retail now pile in, trying to get a hold of some of the gains that the institutional crowd was already able to grab hold of over the weekend. And I think that 40K is extremely plausible. Now, whether or not we hold above 40K is a different story. Sentiment, in our opinion, needs to stay at the levels that it currently is, meaning, above 60, 70, 80 out of a potential score of 100. And we would like to see volume continue to pour in. We saw a massive amount over the weekend, dipped a little bit, now it's back. If spot and derivatives volume continues to pour in, then 40K, we may be talking about that, as something in the past, in a couple weeks.
Are we seeing this from more longer term holders, or is it retail that is coming back? What is this surge?
Yeah, so it's actually both. According to data that we've looked into ourselves and someone that we work with called Into the Block, in addition to the sentiment data that we offer, we are noticing that not only long-term holders growing month over month, meaning long-term, meaning people who've held Bitcoin for more than 12 months, we're also seeing that 1 to 12 month range of holders increase month over month as well. And they've been increasing at a much larger margin than the 12-month holders or longer. So the fact that we're seeing people who've held Bitcoin for more than a year continue to hold and see that number grow, we're now seeing the numbers of holders 1 to 12 months continue to grow at a larger pace as well, meaning that everyone who is kind of transformed into either a short-term holder or just entered recently is now showing conviction for the long term. So if you're thinking that supply is going to squeeze because miners are no longer offloading crypto and retail and institutional holders are grasping their coins for longer, this is showing that there's conviction for a longer term rally and people are quite bullish looking forward. And that is actually shown by the options market as well as what we're seeing in sentiment and our community of traders.
Speaking of the options market, contracts are going to expire at the end of this month and we usually see some downward pressure. Do you see that happening?
Yes, I do think it's completely plausible. And what we're seeing right now is a kind of a massive, it is really very much on the heels of the short squeeze and why we saw so much volatility. But if retail continues to step in and we have a nice monthly close, which I think everyone has kind of been looking for now that the weekly closed with a bullish engulfing on Monday, or a Sunday evening, I should say, people are going to be looking for a strong monthly close. So we generally do see downside whenever options are closing. Traders are obviously closing their bets. They have to close out their hedges as well. This can create a lot of wonky volatility in the market. But as long as there's enough volume and buy pressure, then the buys will overtake the sells, meaning that if we're above 40K, maybe we dip back down into that 39K range just to create a little bit of confusion. But if the buyers step in, as they are currently for the past 3-4 days, then that volatility will just be volatility, and price will eventually continue higher, as we're seeing throughout the conviction from the short-term, long-term holders, options, futures market, and even spot market.
And just one last question. Another talking point we've been following is FTX and Binance. They're reducing 100x leverage. So are we seeing an impact from a potential closure of positions? Do you think lower leverage in the future going forward will make the crypto markets more stable?
Yes, I do. So to answer the second question first, I do think that this adds a bit of stability. The leverage is still high. 20x leverage is still akin to, I think another major investor said, this is akin to a bar introducing a 10 beer or 10 drink limit. It's still a lot of drinks, but it's probably going to take away some of the worst of the crowd that may come through the doors and consume too much. Meaning institutional and retail investors alike are seeing this and saying, hey, crypto's putting their smart hat on. They're putting regulations that are going to protect people in the future that may make price action less insane as we continue to grow the market in terms of investors and market cap. And I think this is actually good long term because it's going to put more trust in the market by the people who have been continuing to sit on the sidelines. They're going to see safety, security, and leadership, and actually look upon that in a favorable light, and maybe that pushes them into the industry a little bit closer than before.